And it's Juergen Stark, who is, of course, the former chief economist for the European Central Bank and a member of the executive board. Thank you so much for talking to us. I just want to start because I'm quite curious on your views about the messages that have been sent by the European Central Bank, by the Bundesbank, Jens Weidmann in particular, sort of often speaking about the hard messages to European leaders about what needs to be done to come up with a conclusion or to solve the debt crisis. Mr. Weidmann also talking about the fiscal compact not being strict enough. What's your view on the effectiveness of the messages?
I think it's right that central bankers speak up at this point in time. Otherwise, there is the expectation on the side of politicians that the central bank could resolve all the problems we do have in Europe. But it is a similar situation in other countries, in other regions of the world, that pressure is on central banks to contribute to the crisis resolution. I think the ECB has done a lot and contributed to this, to the crisis resolution. However, it's only to buy time. So, and politicians have to deliver. In my view, the fiscal compact is a big step forward because for the first time the fiscal rules agreed on the European level will be implemented or will be enshrined in national constitutions or primary law. I think this is a big step forward. At the same time, I personally, and on this point I agree with Jens Weidmann, this is not a quantum leap and more could have been achieved to deal with the crisis and also to prevent a future crisis. By the way, the first test of the fiscal compact or the enhanced fiscal rules, the first test with Spain, in my view, has failed because European finance ministers agreed on a compromise that Spain not to deliver on what it was committed to.
Look, I want to ask you about the collateral, the ECB's collateral, because you've described that as shocking, yet didn't you vote for the loosening of the collateral rules when you were on the ECB?
There were different steps in the loosening the collateral rules to accept collateral of lower quality. At a point in time when Greece had agreed on the first program, it was in spring 2010, and at that point in time, I must say that the ECB, in my view, knew more about Greece and the Greek situation and about the program than rating agencies did. So I think this was fully justified to do this in spring 2010. Later on, I must say, there is no lack of collateral. There is no lack of collateral, and the final step taken by the ECB on the collateral rules to soften the collateral rules further, this was already after I had left the ECB.
Right, okay. But what about the 3-year loans, the LTROs? Because I'm interested, first of all, about where the idea originated from. Where did it come from, the idea to put together the 3-year loans?
No, there were considerations to have an instrument at hand which is closer to the mandate of the ECB than, for instance, the purchase of government bonds in the secondary market, the so-called securities purchase program. And in the discussions we had internally at that point in time, it was considered, yes, let's provide liquidity support to the banking system. It was not only as an alternative, considered as an alternative to S&P, but it was also considered as a necessary measure in order to provide this liquidity in the context of the increased requirements for capital, tier 1 capital, which was asked for by the EBA. I think in this context it was appropriate to consider these operations, to be closer to the mandate, to finance the banking system. However, nobody had expected the dimension of this program, so of these two operations.
And does that sheer dimension of the program actually turn the program into a future risk for the Eurozone?
This will depend on the exit, how to exit from this two measures. There is now a commitment from the side of the ECB for 3 years. So these are 2 3-year long-term operations. The ECB will have instruments at hand to absorb excess liquidity. However, it is easier to expand the balance sheet than to shrink the balance sheet. So it will take some time. And there is, as I said, there is the commitment on the side of the ECB to keep these instruments available for 3 years. These are 3-year LTROs.
Right. Mario Draghi, I want to talk about inflation because he says that there are upside risks to inflation. Now, I'm wondering what that should mean for Europe, for the ECB's monetary policy and rates.
I'm not in charge of monetary policy anymore, so I only can express here my personal, my private view.
Did you vote, by the way? Did you vote for the interest rate cut in December?
In my then capacity as the chief economist of the ECB, I did not suggest to lower rates.
Why not?
Because we lowered rates already, the Governing Council lowered rates already in November 2011, anticipating the incoming bad figures, also anticipating to some extent the very likely downward revision of the growth projections and also the projections on inflation by the ECB staff. So in my view, one rate cut of 25 basis points was sufficient. I didn't want to go to 1%.
So that upside risk that Mario Draghi was talking about, let's just return to that, because what do you think that should mean for monetary policy and rates?
To monitor closely the further development. We have seen so far that inflation rate has remained at a higher level than expected, at a higher level than also for 2012, at a higher level than projected in December last year. So this is a general feature. Growth was overestimated to some extent, and inflation risks were underestimated to some extent. So I think the central banks around the world, because all major central banks have flooded the markets with liquidity, have to consider the medium-term implications of this approach.
Okay. Juergen Stark, thank you very much indeed for coming to speak to us here. Guys, that was Juergen Stark, former chief economist for the European Central Bank. It's back to you in the studio.